Welcome back. My name is Ron and I'm here to inform you about your options when it comes to student loans. Now, if you're a recent college graduate or maybe you graduated some time back, maybe you found a field, a job in your field with your degree, or maybe you didn't. But either way, you're probably carrying high student loan debt. And while student loan debt interest rates are pretty good as far as other interest rates go, they can seem overwhelming. Student loans cannot be discharged in bankruptcy. So if you find yourself in bankruptcy court for your credit cards, your mortgages, or whatever else, and you think you're going to get rid of the student loans as well, you're in for a shocker because it's not going to happen. It's been specifically designed by the government so you cannot get rid of them in bankruptcy court. So I'm here to talk to you about 3 secret options that they don't tell you about that can help you with your student loans. So first off, when I was carrying student loans, I was going through this as well. It's like I've got out of college, my degree in accounting wasn't, I didn't get a job with it right away, and so I was working oddball jobs here and there that were okay, I guess, but weren't what I was after. And when the student loan payments came due, it was about 6 months after you graduate. I was facing several $100s extra per month over the next 10 years. I'm basically carrying a mortgage. So I called them up and I was talking to them and I didn't know what options I had. So while some of them are not forthcoming on some of these options, I had to dig elsewhere. Others were more forthcoming and told me about them. And when I went on later to help other people and they were complaining about their student loans and I told them about some of the options, they looked at me strangely like, "What are you talking about?" And I was like, "Didn't they tell you about that when you talked to them?" And they're like, "No." So these 3 options can dramatically change your payments, whether you owe or not, or if you find yourself in a financial bind, you have options. So first off, the first option is called forbearance. Now, you get these automatically. You get 36 of them after you graduate. And what this is that you can call in and say, "Okay, I can't make my payment this month. I need to use one forbearance." And that's the name they're using for these. And basically, for this 1 month, you do not have to pay. So if you're paying $300 to this 1 month, you do not have to pay that $300. And it's perfectly legal to do so. These are built-in options in the student loan program. So, and you can use multiple of these at once. But remember, you only get 36 of these. So once they're out, they're out. So use them wisely. And all you gotta do is call into customer service, whichever loan servicer you're using. Could be Nelnet. There's a few of them, and they're like independent companies, basically contracted to the Department of Education to manage these student loans. And you just say, "I want to use one of my forbearances," and they have to let you use your forbearances. And so, you could ask them like, how many of these things do I have left, and they'll tell you. You have 19 of them, you have 21 of them, you have 35 of them, whatever the number may be. And then you're like, "Okay, I want to put my student loans into forbearance for this 1 month, or I'd like to use 6 of them." But remember when you're using them that they are limited resource. So be careful because one day you may really need a couple of these. So keep a couple in your back pocket just in case, things get tight and you need to use these in a pinch. So the next one is talking about is called the Income-Driven Repayment Plan. Now, this one was not disclosed to just about anyone, really, and it was a little difficult to get the information in the first place. So one of the other options in the student loan program is that you get out of college, you graduate, you got your degree, but you can't find a job. So after the initial 6 months that you get out, and you get hit with the payments, $300, $400, whatever amount it may be, and you're making, $10 an hour at McDonald's, for instance. You really can't afford this, $300 extra a month, and you got all these other, bills to pay on top of that. So what you can do is that you call in again to customer service and you ask, "I would like to have explore an income-driven repayment plan." And they're not going to be forthcoming with this automatically. So this is the purpose of the video. You need to know ahead of time that this is an option for you. And what it is that you're going to get some paperwork. You're going to fill it out. It's not that complicated. Just take your time, be very careful with it, and then you're going to mail it back to them. And they provide you with all of the options where to send it, and it also includes your most recent tax return, for instance, that you have to prove your income. And if you don't have a tax return for whatever reason, then you'll have to show pay stubs. And now if you don't have any of this stuff at all, then there are options as well. So now what this will do for you is it'll take, say, a $300 payment, and say you're making less than $18,000 a year. You're working, just a minimum wage job, maybe even part-time. And what it'll do is, like, it'll take a $300 payment and it'll knock it down hugely to like $10. Yeah, $10 a month from 300. You can see why they don't talk about this, because the monthly goes down significantly. And what it means for your student loans is, they can still take all that extra interest that was being generated during that month and add it to the principal. So the principal will rise. However, if you need some breathing room, you just can't deal with it right now, this is one of the options that can definitely save you not only a ton of money in the short term, but also in the long term. If for whatever reason you can't get a good paying job in order to pay these things off, then over 25 years, if you're on this income-driven repayment plan, whatever amount is left over at the end of 25 years, they just cancel it. Yeah, one of the few ways to get rid of a student loan debt. They just cancel it after 25 years, if you're on this plan. And you have to renew it every single year. So just keep an eye on it. And if they say for whatever reason that they don't know what you're talking about or whatever, ask to speak to someone else. Don't let bureaucracy bog you down. Just ask to speak to someone else, ask to speak to a supervisor, and if that doesn't work, call back. You'll probably get someone different, because not everyone's the same. Some people don't want to talk about it. Some people are more forthcoming about it. But this is one of your options that they're not going to tell you about. And lastly, the third option is if you have been hurt, seriously hurt, you're disabled, you cannot work anymore. Maybe you're on a Social Security disability, for instance. You can get your student loans discharged. Yeah, there is an option in the student loan program that will allow you to cancel your student loans if you do not have the ability to work any longer. Now, this is much more arduous process because they don't want to cancel these loans. Traditionally speaking, there's no way to get rid of these loans. Bankruptcy won't do it. They have this over your head permanently, so it gives them a lot of power as far as controlling the cash flow. And because student loans are up to $2 trillion right now, they do not want to let go of a dollar, especially when they got this kind of leverage. But built into it is the disability. Inside of it is the disability clause that says if you are disabled and you cannot work any longer, and you can prove it, then you can have your entire student loan balance discharged. It's gone, period, done. Now, they will probably fight you on this one. I've heard many stories about people getting fought on this one. However, you can get, take them to court even, and under this clause, and still get them discharged. So remember, this is an option. So the three options again is, first one is forbearance. You get 36 of these automatically. Use one whenever you need to get yourself a month off on these payments. But remember, you do only have 36 of them, so use them wisely. The second one is the income-driven repayment plan. And you'll have to ask for it specifically, fill out some paperwork, submit it, and then it can drop your debt, not the debt, but the actual payments per month, from several $100s or greater to like $10, $20, $40, like basically nothing. So, you'll have to know about this ahead of time, but now you know because I'm telling you about it. So, and lastly, your third one is if you are seriously disabled, you cannot work any longer, you can have the entire balance discharged through the Disability Act inside of the Disability Clause inside of the student loan program, and get these things canceled. Now, they may put up some resistance on this one because they don't want to let you go. Now, then you may end up having to take them to court. And then on top of that, you can also, afterwards, after you win, you can sue them for punitive damages, which has an unlimited number attached to it. So these are the three secret options that you're not going to be told about as far as the student loans go. So remember, you do have options. If you're facing down a payment or a debt you do not know how to handle, then you have options. So keep that in mind. You still can do something about your situation. Thank you. And if you like the content I'm creating, go ahead and subscribe down below and hit the bell notification so that way you're notified of the new videos I'm doing. I'll be talking about everything from personal finances, budgeting, loans, all this type of stuff. Anything you have to deal with in your day-to-day life, I'm going to be covering on this channel. Now, if you want something specific covered, go ahead and comment it down below, and then I will create that for you as soon as I can. Thank you very much.